Hey everybody, this is Alex from My Trader's Journal, and today I'm looking at a chart of the ETF SPY, which is a Spider S&P 500 ETF, tracks the S&P 500 obviously, and I am looking at starting off here, this is using TD Ameritrade's chart. I'm also going to flip over and show you something on Interactive Brokers chart too, but starting off on TD Ameritrade, I'm looking at the 1 month view, and I have 10, 20, and 100-day moving averages showing here. So right now we can see that for the past week, 2 weeks, almost three, going back really over the past month and beyond, S&P 500 has been trading on and back and forth over its its 10 and 20-day moving averages, and that is not a bullish thing to see because it usually leads into more downside. But I just flipped over and added the 50-day instead of the 100. You can see the 50-day has played support all but once over here on March 27th. So seeing how far back that goes back, the 50-day has been really good support for a while. So that's going to be a key one to watch for us to see if it gets more than a day below. 1 day is not that big of a deal. Like I said, it did a few weeks ago, or 2 weeks ago, but if it closes below it, as it did not do that day, and has a confirmation day the next day, then it could mean trouble for what's coming up in the S&P 500. And as the S&P goes, so goes most of the market usually. So for this one, I'm going to go back over to 6 months and draw a couple of trend lines here to see just on the very bottom of the trend of higher lows. It's close to that right now, still above it, it's fine. The trend of, or that was a trend of, higher lows. This is the trend of lower highs. So we're coming into an inflection point here that could be trouble. We'll see how it goes. Right now, if you take out that second line I drew, this one here, get rid of that one, we're really just in the middle of the same trading channel too. It is narrowing slightly, but it can pop back up over 240 with no problem and still be well within its range. So it'll be interesting to see how that goes. So right now we're kind of in the middle of a trading channel. Nothing big is happening. So we need to look for other indicators of what could happen. So I'm going to add in some different timelines here. Keeping the 50 since it's held, that seems more reasonable. And going down here, see we're way above. We touched on the, get rid of these trend lines here. Get rid of the, or back in November, the beginning of November, we touched the 200-day moving average and haven't looked back since then after the election. Now you just got to start wondering, after we peaked over here at 240 intraday, 240.32, how far we'd have to fall to get down to the 200-day moving average. So I'm going to go over here to Interactive Brokers, which gives an easy picture. The 200-day moving average is at 222.06, and so it's simple math to just show you what I'm doing. It was around 240, just a little bit above that, minus 222, where the 200-day moving average is now. Gives us 18, divide that by the 240 that the peak was. So if we fell back down to where the 200-day moving average is right now, it'd be about a 7.5% decline from the high. So that's not a bad little correction. I think the market's due for that. It's not a full correction, 10% would be a full correction, but it's a nice way to kind of clear some of the holders on who don't have the conviction to stick it out on a fall. And it would probably be a good buying opportunity down here around 222, 225. The line is ascending, so we've got some room for it to go up and maybe have the SP come down, have SPY come down, and meet it somewhere down here would be ideal. And I'd be looking for a good buy around then. The problem is we've already had, looking at down here at the Williams %R indicator, this was the indicator of when to get out, somewhere around here where it broke below overbought. But it didn't come below overbought on the That was only on the 14-day indicator. On the 28 and 56-day indicator, it didn't break below until way over here, where it was really getting close to the bottom already. I prefer to see all of those line up together to be a real indicator, so it's not truly helpful for us. Also, the 14-day indicator came all the way down to, looking at this number here, which I'll come back over here, 97.50 or minus 97.50, which is pretty low. That number alone is not as important because the other two periods that I tracked did not come down with it. Coming back out was important to see where the index started pulling itself back up. But since the 28 and 56-day indicators never reached oversold, it wasn't quite a reset that we needed. So I still think there's room to go down. Should come down farther on all three of these into oversold, and then when it comes out will be the next buying opportunity, a true buying opportunity. You can take a risk and nibble in some before it actually comes out of oversold if you want to be a little more aggressive. But there's not really the momentum shift until you see those come up. So for now, it looks like we're kind of in a holding pattern, as I mentioned on the trend lines before. We're kind of just sitting in here, waiting for it to do something, and even knocking out the high one there. If I go just on the lower trends, it's a pretty straight channel there. So we could completely hold on the 50-day moving average down here, get back up towards the upper part of the trend line and that line of resistance. Then you have to, I think at that point you definitely have to sell, because we'll be really stretched on valuation too. Not really stretched, more stretched than we are now. And some people think we're already too stretched as it is. So I'm not getting aggressive now. As I said in my last update that I was going to try to add some more exposure, but I haven't, because the chart's just not speaking to me right yet. The 10 and 20-day moving averages are not playing nicely together. So I'd like to see those line up and give a better indicator here too. So with the ETF falling below both those both those trend lines, or moving averages, sorry, then I can't get bullish about it. So looking for it to either move up above these trend lines and go back towards the upper end of the trading channel, or come below. And I'm not quite in a mood to short it with this, because it is kind of a funky market right now where it's just moving sideways, slowly grinding higher. It could do that for a while, but I'd be much happier if it came down another 5% from here, since we've already lost about 2.5%. Another 5%, then we'd have a good buying opportunity. So that's where I'm sitting. That's why you haven't heard a lot from me lately, because I'm waiting for a better opportunity. It's possible my patience will run thin and I'll go ahead and put some more in there, and I might do that next week on some small caps. They've come down some more too, so I'll look at that next week, but I'm not doing anything else today. So that's it for now, and let me know if you have any questions. Leave some comments, subscribe if you haven't already, and I will talk to y'all at the next update. Bye.